probably my favorite part because I'm a data junkie, the market update. So the market update is a little mixed this month, meaning that for some of the data, we're going to be looking at February data. For one piece of data for Dallas, we're going to be looking at the March data. So just know that as we go through. So last month for Texas overall, for February, sales prices were up 0.8%, which is so different from what we were reporting this same time last year, when in some cases we were reporting that the sales prices were up about 20% year over year. Closed sales last month or in February in Texas down 15%, which is actually really good, considering how we ended 2022, because many of the months in 2022, as we were ending it, as interest rates were climbing, we were seeing sales down closer to 30% year over year. In the Dallas and Fort Worth market, last month, the average sales price was down 2% to $474,000. The median price down 1% to $394,000. Still pretty strong in the first 2 months, January and February, the prices were actually up. And I think that we are going to, I think this might be our quote unquote bottom, as long as if all of you guys would just do me a favor and stop buying shit. So you think I'm kidding? Like I'm dead serious. Like whether that's coffee or eggs or any of the things that are on the CPI core inflation index. If you guys should just for a couple of months, just stop buying anything, then that could really help us all. We got to band together as real estate investors here. So that could really help us all, because if those inflation numbers come down, what is also going to come down? Interest rates. Okay, so just please, just write this down. If there's not, I guess some of you guys can see have not written anything down. Now would be a good time. Okay, tomorrow to do. Don't buy any more shit. Okay, just write that down. That is your job. That will make you more money as a real estate investor, I promise you. Than buying those things. So please don't do that, and then the market can kind of stabilize there. So closed sales year over year, March 2023 versus March 2022, just over 8,000 units, so flat year over year. Pending sales, and again, this is a good number, down, but only down 1%. So what do we know? What does that feel like to you? That should feel amazing to you, because again, towards the end of 2022, those closed sales were down 20 to 25% year over year. So the fact that we are now down only 1% tells you exactly how resilient this particular economy is. You guys should be thanking your lucky stars. In fact, the Wall Street Journal just did an article about the housing market and basically said it is a nation divided. Because what does the housing market look like on the West Coast? Prices are down 10%. In some cases, like Seattle, I think it was down like 13%. If you look everything west of Texas and west of Texas, with the exception of Austin, all the prices were what? Up. In some cases like Miami, up more than 10%, right? So we are on the right side of the map, and I think this number, pending sales is the closest leading indicator that we have for what closed sales will be as we end the month of April. So it could be down, 1 or 2%. It could even be up 1 or 2%, because what have we seen in the last month? Who knew that a bank failure was going to cause interest rates to drop back down? And that is exactly what has happened. And that has caused people to do what? Get that spring buying fever again. So I think that's something that's helping us. Now, for all of those folks who are not buying right now, where have they gone? To lease houses and apartments. The number of leases in Dallas on the MLS up 29% year over year. The lease price up 3% year over year. So those are the folks that are still on the fence about buying. I'll very quickly go through some of the other stats, just because I'm still reporting February numbers. If you catch the meeting that we'll do next Tuesday, you can catch it online. You'll see the stats for Houston by then, because they should publish probably even tonight. The sales price last month down 2.4%, 385,000. Closed sales in Houston, so Houston's getting hit harder than Dallas, down 23%, but pending sales were only down 11%, so that trend is hitting Houston, just not as quickly as the trend is hitting Dallas. The number of lease listings up 12%, lease price up 11%. The number of new units added for lease up 31%. What happened there? All of those would-be sellers are now accidental landlords. We had a lot of accidental landlords in 2007, 8, 9, 10, 11, and 12 who had a property that they were trying to sell, were not able to sell it, and then had enough money to hold on to it. So we're seeing a lot of accidental landlords right now as well. San Antonio, sales price up 2%, 366,000. February sales down 17%. Leases up in San Antonio, up 15%. In the Austin market, this market saw the biggest increase in the sales prices last year. 2021, if you'll look at the bottom left, 2021 versus 2020, the average sales price was up 29.3% in Austin. If you look on the right-hand side towards the bottom, 2022 versus 2021, sales prices were up 10.4% in Austin. So Austin had the biggest run-up. They're also the first market to see some cracks. They saw a decrease in prices, 536,000, down 11% year over year. Sales down 17% year over year. In a market that was listing properties at 500,000, and in many cases they were on average selling for 525,000. Right? They were selling at above, on average, 106% of the list price. Now that market is selling at 91% of the list price. So this market's getting hit harder, but still doing okay if you consider some of those gains, paper gains. Guys, has this been helpful so far? Okay, good.